Welcome, and thank you for joining us for today's webinar entitled China's Online Payments Industry 2012. What's next? Brought to you by Kapronasia. My name is Paul Robinson. I'll be acting as the webinar moderator. With online commerce booming in China, consumers are able to order just about anything online and have it delivered cheaply and efficiently. Traditionally, these transactions were conducted as cash on delivery, but this is rapidly changing as the online payments providers start to fill the gap. However, recent legislative changes are now directly affecting the prospects of these companies. In this informative 45-minute webinar, we'll explore some of the most important questions in China's online payment market today, including how the new regulations will affect the market players, the market size and its future, and what benefits vendors can gain from this industry and where the potential opportunities lie. Now, I do need to inform you that today's session is being recorded and is run in listen-only mode. However, we really do want to encourage feedback and questions from you throughout the webinar. To facilitate this discussion, we'll use two features of the webinar software. The first is the attendee viewer. This is where you'll see the presentation, and which I recommend maximizing now so you can view the presentation in full screen. The second is the control panel, where you can interact with us. The control panel can be opened and closed by clicking on the arrow button on the Grab tab. In the control panel, you're welcome to submit questions and comments to our presenters. We'll be answering as many of these as possible throughout the presentation and also at the conclusion of the webinar too. Now, with our housekeeping out of the way, let's get started. Our presenter today is Zenon Capron. Zenon is Managing Director of Kapronasia, and he's joining us from Kapronasia's head office in Shanghai, whereas one of Asia's leading providers of independent research, custom consulting, and advisory services focusing on the financial industry and financial technology, they help clients understand and navigate the challenges they face in a challenging region with rapidly changing business, operation, and technological environment. Now, let's get the discussion really going. Let's hear first from Zenon. Go ahead, Zenon.
Thank you, Paul, and thank you everybody for joining. Welcome to the webinar today. Today in Shanghai, we're actually having a typhoon coming through, so hopefully the connection will stay up and we'll be able to make it through the webinar. If you at any point you have trouble hearing us or if it becomes choppy, please let myself or Paul know, and then we can try and remediate anything. So as Paul mentioned, today's topic is the third-party online payment industry in China and what's coming next. This is one of a series of reports that we've been doing this year on the payments market. Already we've been looking at mobile payments, prepaid cards, and now the online payment space. Later in the year we'll be looking at more reports on the payments industry and the banking industry as a whole. So please, at the end of the webinar we'll have more information about how to subscribe to our newsletter, and if you're interested in the actual reports, about how to obtain those reports. As Paul mentioned before, a recording of the webinar will be available, but the slides will not be. So the slides will be for some of our subscriber base and the subscriber section of our website. So if you are a Kapronasia subscriber, you will have access to those slides. So to get started today, let's take a look first at, as we always do for our reports and the webinars, the methodology and purpose. And really any of the reports that Kapronasia do are based on secondary and primary research. First, we use secondary research, which is our internal knowledge, so existing reports that we've done over the previous couple of years, as well as internal databases that we have. And then we also use external sources such as industry databases from the regulators, from other financial institutions, and reports that are happening in the marketplace. And that is all supplemented with primary research. So these are the face-to-face interviews with third parties, vendors, industry experts within the industry who really live what we're talking about every day. The purpose of the report and the purpose of the webinar actually is to identify the key issues and trends in the online payment market here in China, understand where the market is going and how third-party companies will act in the future, as well as to give you some ideas about how you might participate in the market if you're not already here, and how to take advantage of the opportunities. And then finally to give you an idea of what we expect to happen in the future itself. So we have 4 different sections that we'll be talking about today. First, we'll go through the market environment, tell you a little bit about what's happening with the size of the market. Then we'll get into a little bit more detail about the online payment market itself, talk about the industry chain, the revenue models that we find in the market, as well as give you some recommendations and looking ahead. And then at the end of that section, we'll have time for Q&A, hopefully. So if you have questions, please do send them through. So starting off and looking at a very macro view of what's happening in China, in China's financial industry, clearly the economy is still growing. There was a lot of talk about a month ago about the GDP growth has decelerated to about 7.6%. This is, of course, a slowdown for China's economy. For many of the past 10 years, it's been a double-digit growth. The government has an unofficial target of 8%, so this is going below that unofficial target. But if you look at the number itself, that's a GDP growth number that most countries would be extremely envious to have right now, especially those countries in Southern Europe. So whilst China's economy is slowing slightly, the growth is still there, and we expect that to continue. And a lot of that growth will continue through domestic consumption. We'll talk a little bit about how consumer shopping habits have changed due to online payments in the online consumption market. So that's kind of a good indication of how the industry is changing as a whole and how domestic consumption will drive the industry. The other thing that we're seeing is looser regulations, and so this third point and the fifth point are kind of tied together. China this year will be going through a leadership transition where the standing committee, most of the members of the standing committee will be changed or replaced. There will be a new president, a new prime minister that come into place and will be leading the country going forward. So that a lot of the thought around that is that the people that will be coming in will be more reform-minded. So what we've seen over the past couple of years, especially in the capital market space and indeed in the payment space and the online payment space as well, is that regulations have been changing, and fundamentally they're changing to be looser. So the way I always like to put it is if you look at the industry here in China, it's gone from a loosely regulated industry to a more tightly regulated industry, whereas the U.S. has gone from tightly regulated to much looser regulated, and that's actually changing now in the U.S. as well. It's going back to being very tightly regulated. And we're also into the 12th five-year plan. So one of the key points from that was that the financial industry needs more business innovation. So we're expecting to see that within the financial industry itself as well. So when we look at financial IT, getting into the next level of detail behind that, these continued reforms will be pushing financial institutions to invest in IT infrastructure. So as reforms come and the market opens to allow more innovation in each of the different subsegments of the market, the IT systems that support those subsegments will need to change as well to support those changes in the market. So we're expecting to see investment in IT infrastructure continue to grow into the future, and you can see there the chart on the bottom shows a little bit more about the banking industry spend. And clearly the foreign players have a position in the market. They're competing with some strongly entrenched local vendors, but as we discuss a little bit later in this report, and as we've talked about in previous reports, there is a place for foreign vendors in the market, and they'll continue to play a part. Now, if we look fundamentally, before we get into exactly looking at online payments and what those look like, it's worthwhile taking a look at what's happening with China's internet market. So if we look overall, China has the largest population of internet users in the world. So if you look at what it was in 2011, 531 million people, which represents about 38.3% of the population, so the internet penetration of about 38.3%. That number, that absolute number in terms of 531 million is more than the US, is more than the UK, is more than any other market in the world. But what is not the same, or what hasn't hit the same point yet, is the actual internet penetration itself. So when you look at China at 38%, the internet penetration in the US is about 70%. So if you think about the implications for that, as you know, this number will roughly double to get to 70%. So you're looking at about 1 billion people online if China were to reach the same internet penetration that we see in the U.S. So already it's a huge market, and there's still a tremendous opportunity for growth going forward. Now, before we get too deep into China's retail sales and e-commerce itself, it's worthwhile looking at some kind of brief definitions. And we've all heard these terms bandied around before, but fundamentally, if you look at China, e-commerce breaks down into B2C, C2C, and B2B. So B2C is business to consumer, C2C is consumer to consumer, and B2B is business to business. And if you look at the size of payments that go across for each kind of these transactions, for B2C and C2C, so consumer-involved transactions, the payment size tends to be relatively small compared to the business-to-business. So business-to-business is larger payments, and they tend to be bulk payments, so you'll have a bunch of payments going through at once. So when you think about B2B, you think about Alibaba, global sources, you think of sourcing going back and forth between China and the other economies around the world, whereas the B2C and the C2C is more consumer-oriented. So with the B2C, it's looking at businesses selling to consumers. So some examples of that in China, there's a large company called 360 Buy, where you can buy anything from Kleenex and toilet paper to computers online. And indeed, that we'll see a large part of the population, that's how they receive a lot of goods these days. Tmall, which is a service that was recently set up with Taobao. Tmall is more business to consumer focused. There's Amazon China. As well, online gaming is a huge part of the industry here in China, much more popular than in the West. So online gaming services that are typically going through a lot of the internet bars here in China. Payment for online gaming typically goes across online as well, because you're obviously playing the game online, so you want to be paying for it online. And the last part that's unique to China to a certain extent is paying utilities online. So in a lot of cases you interface with the utility company online and make the payments through there. So if we look at China's overall retail sales, so this is online and offline, it's clearly continuing to increase. Even if we look at 2008, 2009, when kind of global financial crisis hit, Chinese consumers were still purchasing and still buying. And so this is part of that domestic consumption story that we talked about before. And we expect this to continue to rise. It is rising a little bit slower than GDP over the past few years. So that's largely down to the fact that exports make up a larger part of the GDP of China, but we're gradually seeing that changed as domestic consumption arises. And clearly, as we talked about before, I mean, that's the focus of the government. There's some extremely smart people that are looking at domestic consumption and see that that needs to be a more critical component of China's economy going forward. So now if we start to look at internet commerce, so this is looking at all types of internet commerce outside of online banking, it's growing tremendously rapidly. I mean, if you look at 2010 to 2011, nearly doubled and expected to grow for the next 4 or 5 years at a similar rate. And that's largely driven by a lot of these online platforms. So when you look at Alibaba, which is China's biggest B2B company, 360 Buy, which we mentioned before, and Taobao, there's many domestic players that are really becoming very active in this market and changing the way that Chinese consumers buy products. Instead of going to the local market, they're buying it online. And again, everything from groceries to movie tickets to train tickets, all of this is now available online. And most of these players, it's worth mentioning, have a nationwide approach. So when you look at Alibaba or you look at 360 Buy, one of the amazing things that I find incredible still after being in China for 8 years is what they call the Kuaidi, or the express service. And you can send this is basically a courier service that works outside of the post office, similar to a FedEx or a DHL, that works both the domestic and international markets. And for the equivalent of about $12 US, I can have a document in Singapore tomorrow. For the equivalent of about $3, I can have a document in Beijing tomorrow, or in Xinjiang tomorrow. So this domestic delivery network has really supported the growth of these companies as they expand nationwide, because delivery is, in a lot of cases, outsourced to these companies. And unlike the Amazons in the U.S. that maybe have to worry about fulfillment through the post office, the alternative alternatives here in China are very cheap, which has allowed these platforms to grow nationally very quickly. Now, when we narrow it down a little bit more and we look at online retail shopping, we can see that online retail shopping as a percentage of total retail sales is increasing rapidly as well. So, in 2010 it represented about 3% of the total retail sales in China, and now it's growing to 4.3% last year and anticipated 5.3% and continuing to grow into the future. And a large part of that is part of the reason that we're on the webinar today, is to talk about online payments, and that's really the proliferation of these PayPal equivalent online payments platforms here in China that are facilitating this growth, that are making it much easier to shop online and much easier to obtain merchandise and do your shopping online. So we expect this to grow dramatically as we go forward into the future, and really again supported by those online platforms. A good example is Taobao. Is about 60% of China's total online shopping value, which is essentially the equivalent of Chinese eBay. But that's only a consumer-to-consumer platform at this point. Most of the business-to-consumer platform has moved on to the Tmall platform. And the Tmall platform as well, it's worth noting, is a little bit more regulated. And that's one thing that we talk about a little bit more about the online payments, is a lot of the people that are resisting of shopping online are unfamiliar with the platforms, or they're worrying about getting false merchandise, but that's rapidly changing as this regulation comes into place. So as I mentioned before, the proliferation of these online payment providers has really driven the surge of an online shopper population. And so now the percentage that we're looking at here is the percentage of online users who actually shop online as well. So when you talk about the number of internet users, when we saw a couple of slides ago that in 2015 it's going to be at about 581 million, of that population, about 50% are shopping online. So it's a tremendous uptake in terms of the shoppers that are actually going online. One of the key aspects that's changed for all payments markets over the past year, and we've talked about this before on the prepaid card webinar and on the mobile banking webinar before, are the regulations. Regulations within the payments industry especially, it was very loosely regulated across all different kinds of payments. So you're looking at online payments, mobile payments, prepaid card payments. It was all very loosely regulated until 2011. And that's really, we talked about it during the prepaid card webinar. A lot of that was driven by the fact that the prepaid cards were being used for tax evasion, for fraud, and it wasn't the best for the government. Obviously, the government's not collecting tax on a lot of that money. So it was a lot of those issues that have prompted this increase in regulations. And so some of the key parts of the regulation that, as they relate to online payments, there were 5 key points that we identified. First of all, third-party online payment providers are defined as non-financial institutions. So what that means is that they can have some of the businesses in common with commercial banks, so they obviously do payments. They can never be real financial institutions in terms of doing overdraft deposits and financing business. They're not recognized as a banking financial institution from that perspective. The second point was they could only issue licenses to third-party players, qualified third-party players. So this essentially is the government takes a look at these players and makes sure that they're qualified before they can get a license. So it's not just every operation that can provide a license. There's a procedure that they need to go through to ensure that they're meeting the requirements in terms of technology, risk management, and coverage in China. The third point was the real naming system. So customers must be registered and identified properly. You can't have anonymous online payment accounts. And again, this is very similar to the prepaid card accounts. Once you get over a certain point, the prepaid card and the online payment provider or payment user needs to have a real name and must be registered and identified. Fourth, the reserve money must be monitored. So again, with the prepaid cards, what was happening before was that as these companies sold the prepaid cards, they'd have to keep some money on hand as reserve money, kind of like a reserve requirement in any bank. Previously, these companies were able to use that money and invest in the capital markets or some risky investments, and so you could have the situation where that reserve money is actually been lost on bad investments in other markets. But now, prepaid cards and similarly for online payments, essentially when you think about the PayPal model, which might be more obvious to some of the people that are on the webinar today, when PayPal takes that money, essentially what happens in China, the PayPal equivalent Alipay, when they take the money from the consumers, it needs to be deposited in a bank. So it's not deposited, it's deposited in an Alipay labeled account within a bank here in China, but it can only be in the bank. It cannot be used for investments in capital markets. And for the last point, new business areas must be approved first. So whenever some of the payment companies move into new business areas, it needs to be approved by the regulators before they can actually move into that space. So when we talk about the licenses, we've talked about this a little bit before. So there's 196 licensed companies, third-party payment companies in the market today, of which 71 can conduct online payment business. So those are companies that are licensed to provide online payment services. So companies like PayPal, the PayPal equivalents, so here in China, the Alipays of the world that are allowed to conduct payments here locally. Two important points about the slide that are really important to note is that foreign players are not allowed to apply for licenses. So we'll talk about this a little bit later on, but about some of the ways that they can get into the market. But fundamentally, they cannot provide the payment services. They have to be provided by a Chinese company. And 59% can conduct more than one type of payment business. So this is important when we talk about mobile payments and online payments and the convergence. So those 59 companies are allowed to do multi-channel, essentially, payments, so across mobile or fixed line or prepaid card, money exchange, bank card acquiring. So those players, we expect to see them take a more important role as we go forward, as they're able to do these cross-platform sales. So hopefully that gave you an idea a little bit more about the market environment that we're looking at. So we want to get into a little bit more detail about the online payment market itself. So when we look at it from a value perspective, we're looking at, in 2008, 0.3 trillion RMB ran across online payment platforms. And now we're at nearly 7 times that in 2011, with 2.2 trillion RMB going across online payment platforms in terms of transactional value. And a lot of that growth is down to financial innovations that have been encouraged by the government, regulations that have led to a more stable industry, e-commerce, the drivers and the platforms that we mentioned before, the Alibabas, the Taobaos, the Tmals of the space that are really driving and growing the online commerce marketplace, which is in turn growing the online payment marketplace as well. Now, one thing to keep in mind about this is that China has always been a very cash-based society, and it's only recently that we've seen some of these other forms of payment in terms of credit cards, in terms of mobile payments, in terms of online payments come into play. And indeed, before these third-party online payment providers were in place, a lot of the e-commerce platforms ran on a cash-on-delivery model. And for many now as well, that's actually the case. So as an example, we ordered a printer a few weeks ago, and we can actually pay when the printer arrives rather than actually having to pay beforehand. So that model still does exist, although it's largely being replaced by online payments, because obviously the supplier would rather have the money before they send the product than after they send the product. So they're obviously pushing for the online platform as well. Now, when we look at a breakdown of the types of online transactions that are happening, consumer to consumer is still the main type of transaction. So when you think about this, think about an eBay platform where you're buying a good from somebody else that's either brokered or non-brokered online, and you're paying them consumer to consumer. But we're gradually seeing, going forward in the future, we're going to see more B2C, and B2B will still be an important component of that as well. So gradually it will shift as we go forward into the future. When we look at the types of usage, we've identified kind of 5 different areas. Others, which we'll discuss in just a second: public utility, online gaming, air tickets, and online shopping. So you can see a breakdown of the usage types over the course of the years and what people are actually spending their money on. And when we talk about other, we'll talk about this a little bit later as well, but these are kind of new innovative business models. So we'll talk about mutual fund distribution, which is one of the areas that's growing in China. And we'll talk about international commerce as well, which is one of these areas that falls into that. So you can see kind of over the course of 7 or 8 years here how the composition of the usage types has happened and how will happen in the next few years as well. Now, when you look at revenue for the players in the market, predominantly, especially now after these regulations have come into place, the main revenue source is merchant fee. So previously, in the online payment space, as we mentioned before, when they've received the money, essentially when the customer is transferred from their bank account to their Alipay account, previously Alipay could go off and invest that money in capital markets. And if you follow what's been happening in capital markets in China, investing in the Shanghai A-share market is actually a pretty good deal in a lot of cases, and the growth in that market has been spectacular. Although there have been ups and downs, and this year it's relatively flat. But in previous years, that was an easy way to make quick money. Now that's changed with regulations, and providers like PayPal now need to keep the money on reserve in a third-party financial institution. So their ability to go off and invest that has changed, and they can't do that anymore. So they're really the main source of revenue for them is these merchant fees. And so these merchant fees are very typical to what you would expect from a transaction fee for a credit card. So the typical 3 to 4% they would see in the U.S. for making a credit card transaction, or indeed using PayPal, which I think is right around the same, 3 to 4% for merchants. So in China, because there's so much more competition, the ratio, or this merchant fee percentage, is much smaller. So you're looking in most particular areas less than 1%. And that's largely down to the competitiveness of the players that are in the market. So you have all of these online players that are competing for market share, and that's really driven down the merchant fee that they can charge, because any of these merchants will be approached by 3 or 4 different online providers to provide online payment services, and so there's quite a bit of negotiating room that the merchants have, because they're very much in demand. So in addition to this merchant's fee, we have the interest revenue from reserve money. So when the providers do put the money in the bank, they do get interest on that money. That's largely dependent on the total amount outstanding, or the total amount that's on deposit with the companies. And then there's service fee for value-added services. And so we talk about this a little bit later on as well. We really see value-added services being a key area of growth going forward, as well as a differentiator. The idea of couponing and discounting and location-based couponing, or location-based services in general, is very nascent here in China. You don't see that very often, so we're seeing that as really an area that potentially these companies could differentiate themselves. So it'll be interesting to see how that develops going forward. Now, when we look at the industry value chain, there's no typical value chain for any particular online player. There's a number of different value chains, but we wanted to give you an example. So we'll look at China's Alipay and their online payment platform. And so fundamentally, when you look at this, there's 2 different ways that third parties have to link to banks to complete payment. One is an online gateway, which is a direct link customers to online banking, and then another one is a third-party account linking with the bank's accounts. So when you look at customers, they have an Alipay gateway that connects the Alipay platform to the bank, and then they have the Alipay account. So they'll essentially, very similar to the PayPal platform, you take money from your bank account and you transfer it to your Alipay account, and the Alipay account in this case is actually an account with a third-party financial institution as well. So this means that in some cases you don't necessarily need to have money on your Alipay account to make a transaction. You can essentially make that transaction directly with your bank. so similar to paying with a credit card or taking money directly out of your bank rather than taking money out of your PayPal account. But the flip side of that is for merchants. Merchants actually do have to have an Alipay account to be able to use the Alipay platform. And so, as I mentioned before, this is just one of many different kinds of value chains that exist in the industry today, but it's kind of representative of a lot of the way that online payment companies work today. So we talked a little bit about the market environment and the third-party online payment market, and get into a little bit more about the competitive analysis and the challenges for some of the third-party online payment companies. When you look at the market share within the market today, it's really highly centralized in the 5 big players in the market. And those 5 big players have about 90% of the market between them. And then there's a number of smaller players on the market. So it's really heavily dominated, about 50% by Alipay, 20% by Tenpay, and then going down from there. And it's worth noting that Alipay is part of the Alibaba family of companies. So Alibaba owns Taobao, Tmall, and Alipay. And really that helped them grow very rapidly because Taobao being one of the online payment platforms, one of the premier online payment or the premier online e-commerce platforms in China, obviously then Alibaba wants Taobao users to use Alipay to settle their accounts. So they're able to tie users into Alipay, similarly to the way that eBay does with PayPal in the US. So, the fact that you need to have a PayPal account to use eBay is very similar here, and that's helped Alipay grow. Tenpay is associated with Tencent, which is one of the other big providers here in the market, and one of the large kind of internet conglomerates here in China. So really these smaller players are seeking to differentiate themselves through a number of different ways, and we talk about this a little bit later on in the presentation in terms of a vertical focus or of a more regional focus or specializing in particular products like mutual fund distribution. And that's really how they're trying to differentiate themselves, because they can't compete with Alipay and Tenpay in terms of the number of users, so they have to seek other ways of differentiating themselves. And really, if you segment the market, there's a number of different ways to do it. You have the Alipays and the Tenpays that are overall, all around very strong players in the market, and they have an enormous consumer base and cross-industry payment platform, cross-industry and national payment platform. You have the China Pays that are more supported by the SOE relationships. So working with a number of the banks, a strong relationship with the banks, strong relationship with China Union Pay, that helps them to develop. Some of the smaller players that are more innovative, the 99 bills, the e-pays that are looking more at product differentiation. And then the fourth category that we've identified is industry-oriented. So these are the guys that are looking at particular verticals and providing solution, kind of end-to-end solutions in a particular vertical to service that vertical. The experienced players, the ones that have been here for a number of years, the payees, the IPS in the market, and then finally the PayPals, the foreign players that are trying to get into the market. And really there are some strong barriers to entry and strong barriers to success that these foreign players face in the market. And that's something that's been played out, especially with PayPal, that have made a number of attempts to get into the market but have been really challenged by some of the restrictions and the regulations that are in the market. So as we mentioned before, really the way that these companies are starting to compete outside of the big ones that have the big consumer base is by innovation, and that's either through product innovation, vertical development, or horizontal expansion. So business scale we're seeing is no longer being as important as differentiation, and these are the 3 main strategies that we're seeing companies take when they go forward. We're going to talk about a couple of those now. So the first one that we're looking at is actually cross-border shopping. So this is becoming more and more prevalent in China as consumers are more easily able to buy goods from other markets. And so a lot of the local providers are developing relationships with the online shopping players or payment providers from foreign markets to help facilitate that trade. So that's actually somebody going on and buying, instead of buying Nikes from the local Nike store or from Taobao, they actually go online and they buy it from an Amazon or they buy it from another player abroad. And so these online payment providers are facilitating that transaction and bridging from the local renminbi to the foreign US dollar accounts, helping facilitate that FX and helping to facilitate the fast payment and delivery. And I can personally attest to this as well. In certain cases, I can order something from a vendor online in the U.S. and I'll receive it next week, which is very similar to what you would expect from a lot of the local payment providers. So we've seen TenPay, as an example, has signed a strategic agreement with CyberSource and AsiaPay, and both of those are kind of leading global payment platforms. And they can also benefit not only from the geographical scope, but also from the technology scope. And that's the way a lot of these guys are learning in the market, is by partnering with foreign providers to learn about how they do business. Now, an interesting area as well in China is online fund distribution. So we're talking about asset management, mutual fund distribution. And currently only about 10% of mutual fund distribution happens online in China as compared to 30% in the US. So if you think about E-Trade in the US, you can buy mutual funds through E-Trade or through other online platforms directly from the mutual fund companies themselves. Here only 10% of that happens online. So that's something we're actually going to see quite a bit of growth in, because currently 58% of that 10% is through banks. But it's strongly under threat from third-party players who, 7 of which have obtained licenses to be able to start doing this mutual fund distribution. So we expect this to be much more competitive. And again, that's a way that some of these smaller players are seeking to differentiate themselves by getting into the mutual fund distribution space. The other area is vertical focuses, and a lot of the players are looking at providing end-to-end vertical solutions for the manufacturing industry, for the retail industry, focused on particular areas and really being the #1 provider of online payment services in that area. So when you look at the platform that they're providing, it really is an end-to-end solution. So you look at the channel, look at account management and cash concentration and allocation, kind of the settlement on the back end, as well as risk management. So if you look at the value chain that these guys are providing and the value proposition that they're providing, it really is end-to-end solutions, looking at all different kinds for those providers. Something we talked about a little bit before is mobile convergence. We expect to see this more and more. Customers are starting to shop on their mobile phones for goods and services. So this may be through an app. So there's a Taobao app that you can download and shop directly on, or it might be through online web as well. So there's a number of convergence that we're starting to see happen, and that's really, as we talked about in the previous webinar, as mobile payments take off and these online payments take off and the e-commerce, the online shopping takes off, it's really a perfect storm that's driving the convergence across these different platforms. One of the challenges, and this slide would not be out of place in pretty much any slide that we were talking about or any webinar that we were talking about, the financial industry, risk management is still a key part, especially in this space. So the market is still nascent, and risk is a growing concern for the participants and the regulators. And that's looking at risk in terms of technology risk, reserve risk in terms of what are the third-party online payment providers doing with the money that they collect from consumers to put in their accounts. Transaction risk, are you buying real goods? Are they fake goods? Phishing websites to get login information, as well as systemic risk in terms of IT risk, operational risk, and of course money laundering. Because as we've seen in the past with prepaid cards, money laundering was a bit of a challenge in that space. So looking specifically at technology, clearly as the market matures, risk management and business innovation will drive the need for stronger IT systems. And you can see below, I won't talk about this in detail, but players today are either developing solutions in-house, they're cooperating with external solutions vendors, or they're outsourcing the entire operation. And clearly outsourcing is preferred for the smaller vendors who may not have the human capital in-house to be able to develop the systems in-house. But what we're seeing here, and what's key for a lot of the foreign players, is the fact that more and more companies are looking for foreign vendors to provide these online payment platforms and helping the local players understand the new technology, both in terms of new business models and in terms of risk management. So that's really where we're seeing a lot of the a lot of the interest from the local providers for foreign platforms. So we're rapidly getting to the end of this, so I would encourage you, if you have any questions, please do send them through. We've got a few more slides to go through talking about what we're looking ahead and some recommendations for the future. Clearly, from a general trends perspective, regulations will be released further in the future, and that's really to drive the industry to be a little bit more stable and encourage that growth going forward. We don't expect to see that many more licenses being issued in the future. So a lot of the current companies, you may see a lot of M&A as a way to get access to those licenses. So if you think about those 59 companies that we mentioned before, they're already set because they have cross-platform payment licenses in many cases. But in certain cases, if you're limited only to online payments and you wanted to get into mobile payments, but the government isn't releasing any more licenses, M&A is a way to do that. So we'll see more of that going forward. Certainly more innovative products. A lot of the products that are in place right now are just online payment platforms. So essentially transaction platforms. So more things around couponing, loyalty programs we'll see going forward. The debate on market openness will continue going forward in the future. So there's a lot of pressure from foreign payment companies. So it's not just in the online payments industry, but also with credit cards. Obviously that's a key area. So the debate on market openness will continue, but we still see, in the next 3 to 5 years, we're not seeing much change in the protections that are in place. Much like the banks were, in the early 2000s when the WTO agreements were signed with China, we expect to see that protection in place really to protect the incumbent, the domestic players in this market. But in the end, vendors will benefit for the demand for innovation because obviously a lot of the vendors have seen what works in other markets, and bringing those models to the Chinese market will help the local players to develop their value proposition and differentiate themselves in the market. So finally, when we look ahead, recommendations that we have, clearly watching out for the new regulations is really important to keep abreast of what's happening in that. I don't think people knew that the regulations that coming down the line for the payment providers in 2011 were coming, but it wasn't clear when they were going to happen. So really paying attention to the regulations and the changes in regulations are really important to stay abreast with what's happening here and stay ahead of what's happening. For foreign players, for foreign online payment providers like the PayPal, their only option is to partner with third-party companies because they can't provide the system themselves. Now, what vendors can do is vendors can actually provide payment systems to these players as long as they're not running the systems themselves. So in other words, if you have a software product that facilitates online payments, you'd be able to sell that into the market, but if you're actually providing that payment platform, you would be unable to sell that in the market. Innovation, we talked about this a little bit before, and cross-border cooperation. That's really another area that we see the opportunities for foreign players to get involved in the market, whether you're facilitating a connectivity to foreign markets or you can somehow provide services in those foreign markets. That's more of an opportunity for foreign players to play in this market. So the last point, just before we get into the Q&A, in terms of report availability, the details will be available on Kapronasia.com within the next week. We do have the report completed and we're making some final adjustments, so availability in terms of how to get that report will be available on the site. If you are a Kapronasia subscriber, if you're subscribing to our banking advisory service, this is part of your service. If you're not part of that service, then purchasing the report, the details will be on the website about how to do that. And the webinar recording will be available on Kapronasia.com within a couple of days. And all of the attendees and registrants for the webinar will receive information about how to view that recording. So if something wasn't clear to you the first time around, you'll be able to see it there. So with that, I'm going to pass it back to Paul, who I think has probably received a few questions over the course of this webinar, and maybe help us going through those.
We can. Good. All right. Well, thanks very much for that, Senna. That's some fascinating information there. I mean, every time I do these with you, I learn something as well. So I know we've had a few people pass questions across here. Let's get into a few of them. So as Zen had mentioned before, if you've got more, feel free to put them in that question panel. We'll be taking them here while we've got a few minutes before the webinar ends as well. But let me get started with the first one. And it says, how will the new regulations affect foreign payment companies like PayPal? Now, I know you've sort of addressed that in the presentation, but maybe you can give us a little bit more information as well. Zenon, you may have put yourself on mute.
Sorry about that. Okay.
There you go.
As I mentioned before in the webinar, I mean, the regulations, particularly around online payments, are pretty strict. And this is partially because of protecting the local players as well as protecting the industry in general. As we mentioned before in the prepaid card industry webinar, the reputation of some of the payments industry has struggled somewhat in the future, in the past with fraud and issues about money laundering. So clearly the regulations are getting a little bit more strict right now. And a lot of the players that would want to come into the market probably have a better idea about what works and what doesn't work, because a company like PayPal that's been operating for a number of years in the U.S. and other markets could be very competitive if let loose on the Chinese market. So there's a bit of protection that they want to have in place. That doesn't mean that there aren't opportunities. So the opportunities for platform providers, as I mentioned on the last couple of slides there, are really to partner with some of the local companies and share some of the innovation and some of the knowledge that they have from other markets, in turn for getting a piece of the pie here in China, as well as for foreign vendors who are actually providing products, both in terms of software and platforms that could be used by the local players. So that's another way that foreign players could get into the market. But clearly we don't see the regulations for foreign payment companies changing in the next 3 to 5 years. So that regulation will probably still be there going forward.
Okay, thank you very much. All right, the next question. It says, we know that recently there was a complaint sent to the World Trade Organization about the contention between China UnionPay and Visa. Is this a sign that China will open its electronic payment market soon under the pressure?
That's a good question. If you're not aware, I mean the credit card market here and indeed the debit card market, the payment card market as a whole, covering both credit cards and payment cards and debit cards, is largely controlled by the national switch, which is China UnionPay, and that's in theory that's invested in by all of the banks here in China, but it's largely a government-controlled organization, and so they've had a dominant position in the credit card space. So companies like Visa, MasterCard, Discover, American Express haven't been able to really get a foothold in the market. And the interesting thing to note about that is that there actually isn't regulation in place preventing them from doing it. It's just a question of scale, because your options as a Visa to enter the market is buying essentially bandwidth off China UnionPay, or buying switching services off China UnionPay, which China UnionPay is not providing, or setting up the network yourself, which is an incredibly costly network. And when you look at China UnionPay, it was originally developed from many smaller provincial city-level switches that then were amalgamated into this national-wide switch. So for Visa to do that, they'd essentially have to start from scratch. But the payment industry as a whole is still very nascent compared to the foreign markets. So, really in short term, much like the banking industry, that industry protection we'll see that in place for the next 3 to 5 years. I don't think that'll change anytime soon, and that protection for online players will still definitely be there.
Okay, great. Hey, we have an interesting question that's come up here as well, and it's I'm not going to name the person who's asked it, and they ask, where do you see the biggest career opportunities? So obviously there's a lot of players and a lot of market, a lot of new people coming into the market. So any suggestions around career opportunities? And that one's not from me, by the way.
Yeah, I didn't know you were looking for a job, Paul. It's a really interesting point. Actually, the challenge of this is the fact that it is an online platform that scales very rapidly. And as we hire new grads for Kapronasia as well, and clearly the areas that we see them focused on are the financial industry. So they want to go work for a bank, or they want to go work for an Alibaba or a Tencent. So the market is very competitive in that space. And when you look at the market for foreign nationals and for domestic, so Chinese nationals, it's very, very difficult for a foreign national to find a job within that space. So I'm not sure if the person who asked the question is foreign or is local, but as a foreigner, you really need to have a very specific set of skills to work for one of these companies. I mean, to the point of having worked for PayPal for 10 years, or having worked for eBay or one of the other big providers to find a job in this market. And even for the Chinese nationals, it's a very competitive space because everybody wants to work for these bigger companies because it's a fascinating job to have, and then it's really where some of the best opportunities are. So, going back to the original question, where do you see the biggest opportunities? I think the financial industry as a whole is continuing to expand, and the payments services part of that market will grow as well. I don't know if there's any particular space that's growing more rapidly than others. I think over the past 5 years, we've seen maybe 5 years ago it was a little bit easier to get a job at one of these bigger players like the Tencents or the Alibabas, but it's just gotten more competitive as more younger kids graduate, and as these companies begin to get a little bit more like Google and more selective in terms of who they're hiring to bringing in. So I don't know if that answered the actual question. It's a very kind of difficult question to answer.
It's a tough question to answer.
It gives some insight into what's happening.
Yep.
Yeah.
That's a tough question, but it's okay. I'm sure the presentation will have given the person who asked a whole lot of ideas as well, so that's good for them. Okay, I think we've got time for a couple more. We said we'd finish sort of around quarter to the hour, a little bit over, so let's get through a couple more questions before we end the webinar here. When customers use third-party online payment platforms to do online shopping, repay credit card bills and buy air tickets, do they actually need to pay any fees for doing this?
Yeah, so it's an interesting point. Because the market is so competitive, and because all of these online payment platforms are competing not only for merchants but for users, the users typically don't pay anything, at least for the domestic sites. So when they're buying air tickets or anything else, as long as you're not using a credit card, the sites typically don't charge for that, and neither do the online payment providers. In most of the cases, it's the merchants that are paying. So, to attract more users to use credit card payment services, third parties aren't charging any fee, and then you can actually use, in many cases, you can use the online platform to pay your credit card bills from different banks using the online money, using the money from your third-party accounts as well. So when you look at making deposits or withdrawals between your Alipay account and your bank account, you typically wouldn't pay any fee on that. And then when you take money from your Alipay account and you pay your credit card bill, you wouldn't pay any money on that. So it's really the merchants in most of these business models. The merchants are the ones that are paying the fees, and then the online payment. And even then, if you recall in the previous slides, those fees are relatively small compared to credit cards. So the merchants really aren't paying that much either. So it's really the online payment providers that are kind of absorbing that cost in the name of competition.
Okay. Yeah, pretty similar, I guess, to the US markets as well, in the PayPals and so on, where unless you're a little bit higher registered to them, you don't have to pay too much. So, okay. All right, one last question here, and then we'll wind it up. For any foreign IT vendors who want to enter this market, what's the most important factor they need to consider? I know you sort of addressed that earlier on, but maybe you can just give a little bit more information there.
Sure, sure. Yeah, that's a good question. I mean, for the people who aren't familiar with Kapronasia's business model and what we do, most of our clients are financial technology companies. So we work with them to advise them on coming into the Chinese market, as well as some of the trends that we talked about in this webinar. And one of the key things is localization. In any case, and that's not just localization from a technology perspective, but from a cultural perspective as well, is really understanding the Chinese consumers. Every day when I live in China, I see things that wouldn't make sense to me in foreign markets, but that's the way it happens here in China. And it sounds very trite to say, but that is China. That's the way it happens here, and that's the thing that happens. So really, decisions within the financial industry and within the payments industry aren't necessarily made on the best technology. You might have the most innovative technology out there in the West, but if it doesn't apply to the Chinese marketplace, there would be no uptake for it. So it's really, it's understanding the culture, understanding the mentality of the Chinese consumer and the person who's going to be using the technology product. And there is a technology element to that as well that I should mention. The localization in terms of the double byte characters to be able to support that. There are some accounting standards that need to be built into the software that's coming here. So there are some technology localization that need to happen, but that's not unlike any other Asian country or indeed any Western country with a different language or a different character set. But the real challenge is understanding what's happening in the market here from a cultural perspective.
Okay, brilliant. All right, well, we've got through all the questions there, so let's wrap this one up. As Zenon mentioned a little earlier during the presentation, the discussion was based on Kapronasia's upcoming online payments industry report. This report's offering critical insight into China's online payments market today and is available as part of Kapronasia's subscription service. Now, if you haven't already registered for this valuable service, we'll also be providing a link to do so in the email you'll receive, thanking you for your attendance at today's webinar. And in that email will also contain a link to the recordings, and I mentioned that you're going to get that too. We've been making that today. And if that way, if there's any information you missed or if you want to listen again at your own pace, you definitely can. Now, once again, Kapronasia appreciates your time today and hopes you found the information informative and helpful. I'd like to take this opportunity to thank Zenon for a great presentation. We really appreciate it, and managed to get through it without being too affected by the typhoon there. So thanks very much, Zenon. This concludes our webinar today. Thank you to you all for joining us.